We started from July 1, 2017. Initially, it looks like good and simple tax. No doubt about it. But we know since July, we are only filing GSTR 3B and GSTR 1. GSTR 2 we are not filing, GSTR 3 we are not filing. GSTR 3B is in lieu of GSTR 3. Now the problem also we are facing, we have seen that on last cutoff date, returns are not getting submitted for number of variety of region. Even yesterday, I'm being told by some large MNC that GSTR 3B was not going smoothly on GSTN server. And the message was coming, you need to verify your bank details. Yesterday, I'm telling you. We are in the month of April, 9 months gone, but still we are not in a position to file our GSTR return smoothly, and now we are looking forward for the simplification. Nevertheless, I know IT has got its own problem. They are correcting it, and I'm sure over a period of time it will definitely be eased out. But what government is doing, how they are heading for. Another information which I would like to highlight here, that in last GST Council meeting, they have said by doing data analytics that the variation of self-declared GST liability when they look at GSTR 3B and GSTR 1. So what is GSTR 1? I am sure you know, outward supply. Am I right? So if I'm a supplier, you all are a recipient, I am supposed to upload my outward supply details in GSTR 1 by 10th of next month. That is the normal provision. And that gets auto-populated for you being a recipient to check and verify your eligible input tax credit, GSTR 2A. But it is having option that you can add in case I have not updated, uploaded any invoice particulars, you can add the invoice. Even you can modify and delete as well. And after that, you can file your GSTR 2 by 15th of next month, which we all are not filing. Then if you do any add, modification or delete, GSTR 1A gets auto-populated for your supplier. I can see that what all changes you have done in my outward supply. So I need to confirm. If I confirm, then my GSTR 3 and this GSTR 1A supposed to be confirmed by 17th of next month. And by 20th, GSTR 3 need to be finalized. This is the process. Now what we are doing today, we are filing GSTR 3B and monthly GSTR 1 for the taxpayer having aggregate turnover more than 1.5 crore and those who are having less than 1.5 crore quarterly. This is how the process going on until 30th June 2018. It will continue like this. After that, they will come back what kind of GST return we have to file. So this presentation which is there before you is being presented in recently held meeting on 17th of April. And that meeting was chaired by none other than Deputy Chief Minister of Bihar, Sri Sushil Modi. And he is chairing one particular committee group of ministers under GST Council. And we have attended, PSG Chamber of Commerce has attended this meeting. And in that meeting, the first half I have seen 40 Chamber of Commerce software, Tally, like I've seen other kind of software service provider, ASP also. They have given their suggestions. And this presentation was made very first time in that meeting. This presentation was not available to us before. Only on 17th April, 2018 when we attended. This presentation was made by CEO Mr. Prakash Kumar of GSTN. What is this presentation? I will also run through before you and will give you the insight what government is thinking and how they want to move forward. So we have also given some suggestion during that interactive session, and post-lunch they have invited 15 leading tax experts for giving suggestion on GST return filing. Fortunately, I have attended both the meeting on behalf of PhD Chamber of Commerce, and being tax expert, I have also attended post-lunch session as well. So let me first run through this presentation and show you what government intention is, how they are moving forward, what they are looking into, what kind of GST return they are talking about. So kindly run through with me. I will show you. This is in a PDF form, so kindly bear with me. What they are thinking now, they are saying that now instead of 3 return per month, GSTR 1, 2, and 3, multiplied into 12, 36 return. Now they are saying reduction in number of returns to 1 return per month. This is the first point they are making. So instead of 36 return per registration, it would be only 12 return per month basis. Subsequently, they are saying now there will not be any requirement of to and fro movement of invoice data. GSTR 1, then getting 2A, then 2, then 1A, then GSTR 3, nothing required. So what they are going to do? Simplicity of return design. They are designing the return with the simplicity. What would be the simplicity? They say summary of outward supplies, my outward supplies, and inward supplies with annexure of invoices for outward supplies and inward supplies attracting reverse charge method. So my outward and my liability as a reverse charge will come as annexure, and there would be kind of consolidated monthly return. Now what this will have? Continuous upload and viewing of invoices. Who will upload the invoice? Read, suppliers should be able to upload invoices. Supplier should be able to upload invoices at any time basis. Any time basis. And recipient should be able to continuously see such invoices uploaded by the supplier. First question must strike to your mind, what happens if supplier has not uploaded the invoice particulars? Whether recipient would be denied the credit? Just trigger to your mind. I will definitely take you to the level where we are reaching, but just this will trigger to your mind. What happens in case supplier upload and there is a mistake? As against 10,000, he is only saying rupees 10, or as against 10,000, he is saying 10 crore. Maybe possibilities. So they wanted everything to be uploaded by suppliers, and being recipient, I can only view. Okay? Safeguard the tax revenue. The input tax credit mechanism should have mechanism to protect government revenue. Everything is to protect government revenue. No denial. We are for it, but we want simplification. Let's move forward. Follow business practice. As far as possible, follow business practice rather than disrupting the established practices. Now, example, they have said upload of invoice data by bunching line items at tax rate level led to increase of work for seller and buyers both together. This is what the first slide referred to. Now they are saying what happened. The return committee, as I said, led by CEO Mr. Pandey, constituted by GST Council, submitted their report, and they have suggested what kind of GST return would be under Model A. Model A. So this Model A is being presented by Return Committee. There's a Model B which is being suggested by Mr. Nandan Nilekani, former chairman of UIDAI. So we have to make comparison between Model A and Model B, and we have to find out can we create fusion model? Mix of A and B. So we have to really understand what is A talking about, what is B talking about, and what could be the fusion, and whether fusion model is really helping to the taxpayer, right? Both models have many commonalities but few differences. What differences we will discuss. Both reports were presented before the GST Council in their last meeting, and the Council asked the group of ministers under chairmanship of Sri Sushil Kumar Modi to consider both and come up with one model. So they're looking for some fusion model, combination of, but that need to be approved by GST Council. This meeting is towards this goal in terms of wide stakeholders consultation. So this meeting was held, the 17th April meeting was held to take our input, suggestion and feedback, and this meeting got closed. That chairman, Mr. Modi has said, I'm giving you 7 days time to the taxpayers, to the stakeholders. They can come back with their suggestion, and tomorrow is the last date for submission of suggestion, input and feedback on these models. Model A. And this Model A is being recommended by Committee on Return Filing. What this Model A says, and here I need your attention, you just go slow and kindly take a note of it, what this Model A is suggesting. Model A is suggesting monthly return. And it will consist of summary return, like GSTR 3B, like present GSTR 3B. And it will have annexure, an annexure for invoices for outward supplies and inward supplies attracting reverse charge method. So consolidated return with the annexures for outward supply and inward supplies. No system-based matching. Nothing would be matched system-based. Now again, the responsibility lies on our head, taxpayer. Matching would be done offline by taxpayer. I do not know to what extent simplification we are referring to. And just think of SME and MSME sector. First of all, they are crying that how they will generate the invoice. Now this matching need to be done by all the taxpayer, irrespective of their label, whether the small, medium, large, or for an MNC. And that will be offline. Okay, this is what they are contemplating. Go ahead with me. Continuous viewing of invoices. Being recipient, you can only view the invoices which is being uploaded, invoice particulars uploaded by the supplier. This is what the crux of this particular line. Recipient would be able to continuously see the invoice uploaded by the supplier and its tax payment status. Kindly bear in your mind, and its tax payment status. So we will be able to see the invoice particulars uploaded by supplier and whether he has made the payment against that invoice or not. So supplier can make payment of taxes in two modes. Either he can pay taxes through his e-credit account, am I right? Yeah. Or in cash, am I right? So as a recipient, you can see those invoices are being paid or not paid. If it is not paid, then can you claim credit? You can't claim credit, right? You know, for availing credit, there is a specific provision. And provision says there are 4 parameters. You should have tax invoice with you. You must have received goods and services. Supplier must have paid the taxes. And recipient must have filed the return. Now, first point which is coming to my mind, okay, I have made the payment to the supplier. And supplier in turn has not made the payment. Credit would be denied in the hands of recipient because supplier has not made the payment. Whereas I have made the payment to the supplier, what will happen to those situations? They are saying, no, you can't take credit. And I'm going to show you some of the suggestion which we are putting forth in this simplification of GST return filing. So this is the first. Model A further continues. Continuous facility to add invoice. So what happens? Supplier misses to upload any invoice, he can upload in subsequent period as well. Seller would have continuous facility to add invoices for the past period as well. So in case, let's say into month of July, as per law, as per system, they wanted me to upload all July invoices. But in case I have missed some of the invoices, I can upload even in the month of August, September. They will create some transition time period. I can upload those invoices. So on my uploading, my tax liability gets created, right? And then you will get the credit. But question comes, if I don't upload, can you take credit? I will discuss this matter as well. And it's going further, partial payment of tax. Partial payment of tax on self-assessment basis shall be allowed. Buyer would be shown the tax payment status of the purchase invoices in the conventional design. I have not seen that design as yet, but they are referring to some conventional design. Input tax credit to the recipient shall be allowed provisionally, taken on the basis of receipt of goods and covering invoices giving declaration on aggregate basis. This is very important. Model A, if you compare with Model V, it's better off. Model A says provisional credit would be available to the recipient if he has received the goods and he is having the invoices. But such invoices are not uploaded by the supplier. You can avail credit provisionally, but they are giving some time period, 3 months time period or 4 months time period, during which it need to be reconciled. So if you're taking provisional credit, you should push me, being supplier, Mr. Jain, kindly upload the invoice so that it get reconciled. If it is not reconciled, then at the end of reconciliation period, that would be called ineligible credit. You have to reverse such credit. That is how the process will move when we are referring to Model A. Return filing shall be spread out. It's a good thought of, and they are saying that above 1.5 crore by 10th and lower by 20th of next month, except composition dealer. So they are referring to return filing shall be spread out in staggered manner. Okay, all right. Now this is again the Model A recommended. They are giving how the action would be taken. So I would like to draw attention. Main return would be summary return, as I said, with outward supply and reverse charge as an annexure. Rectification platform. This IT platform would provide facility to continuously add missing invoices. I said if I have not uploaded July, I can upload in the month of August, September, October, till the time period is open to me. Missing invoices, credit note and debit note for the past period, and pay tax liability thereon for a period, say rectification period. Action on excess credit. If you take provisional credit, what could be the action? On expiry of rectification period, which may be 3 months or 4 months, or maybe 6 months, GST Council will decide. Cases where excess credit is taken shall be taken up for assessment and scrutiny. Missing invoices to be reported towards the end of rectification period. So missing invoices to be reported towards the end of rectification period. So first and next question will come to your mind, how this missing invoices intimation will come in the mind of IT, because supplier has not uploaded and provisional credit taken by you on the basis of invoice and goods received. I will also explain you how it will come to your mind and how system will come to know. Tax administration shall take action to recover such tax from seller. If you have taken provisional credit and I have not uploaded my invoice, that would be called ineligible credit. So after rectification period, it would be recovered from you on the basis of missing invoices reported where recovery takes place. Credit would be considered valid. Okay, this is what they have given some snapshot. Let's say invoice referred to April month. You can upload even in the month of June for the missing invoices of April, July, August, and credit can be taken. Once reconciliation period is over, and those are not being reconciled between supplier and recipient, that excess credit taken by you, which is provisional credit, need to be reversed. That is what the snapshot is being referred here. Come to model B, and this is being presented by Mr. Nandan Nilekani. And he's saying straightforward. He's saying there will be continuous facility to add invoices. Like seller would have facility to add invoices continuously for the present as well as past period. Same. And pay taxes thereon. Continuous viewing of invoices, same. Recipient would be able to continuously see the invoice uploaded by supplier, and buyer can lock the invoice. Lock the invoice, new concept. I will see the invoice and will lock it. Once I lock it, credit is available to me and seller can't edit and delete. It becomes confirmed liability of the seller. Input tax credit here. Once you accept the invoice and it becomes confirmed liability of the seller, and seller has paid the taxes because it has got linkage to the tax payment, then only this credit would be available. So ITC is confirmed ITC, no provisional credit concept, as we have seen in model A. In model B, they are not talking about any provisional credit. You are dependent only on supplier. If your supplier does not upload, you have to keep chasing him and telling him, boss, kindly upload, kindly upload. And just imagine I'm a Maruti, I got 10,000 vendors, and those small vendors, we have seen practical and operational inconvenience. We have to chase them hard to upload it so that I can get the credit. So we need to have system in place. This is what the message is coming out. Return design. System will draft monthly return based on supply data uploaded and inward supply accepted. Annexure will contain these details along with the data on B2C, credit note, debit note, reverse charge purchases, paid by the taxpayer, safeguard, to be put in place to ensure system is not gamed. So how they are putting those safeguards, not known at this point of time. Now they have taken the core concept that what this commonalities they are referring to, model A and model B. I have also said, so I'm not taking much time moving further. Now what don't match in two models? What are the differences in two models, model A and model B? When you go to model B, first you look at model B. They say continuous invoice upload and acceptance, right? Model B also suggests continuous invoice upload with optional acceptance step. This is the difference. Model B second says ITC only on supplier uploaded the invoice. No provisional ITC on basis of buyer uploaded invoices. And what this model A says, rectification process for upload of missed invoices. So being a recipient, if I have taken credit which supplier has not uploaded, he will have some rectification time period to upload such missing invoices so that provisional credit is being matched. Model B, last item, ITC linked to the admittance of liability and not discharge. No concept of ITC reversal. There is no provisional credit. If supplier has uploaded, which is being accepted by the recipient, confirmed liability, paid off, ITC available. What this model is saying, reconciliation process of matching the ITC claimed to tax paid invoices to be filed after 3 months and reversal of unreconciled ITC. It further goes down and says there are 2 points, and this is very, very important, where I would like to highlight how we are suggesting to the Government of India and what we have suggested. However, there are two significant differences at a fundamental principle level and consequently at implementation level. The first one is provisional credit. Model A is permitting provisional credit, Model B is not permitting provisional credit. What Model A says, buyer can provisionally claim credit by uploading invoices. Model B says no provisional credit, ITC only on supplier declared invoices. Model A again says missed invoices must during the rectification cycle. Model B say IT facility to notify supplier to upload missed invoices. I do not know if recipient also does not upload any missed invoices. How come IT will come to know that these are the missing invoices on the part of supplier? I have not seen that kind of mechanism, but this is what they are referring to. Linkage to the tax payment. Linkage to the tax payment means the invoices on which we are availing credit must be paid by the supplier. That is the meaning all about. So kindly read Model A. Model A says automatic reversal through filing of credit reconciliation report after 3 months. So there is a filing of credit reconciliation report. Just imagine who is going to file this reconciliation report? It is on taxpayer. Reconciliation. If it is not reconciled, then reverse. This is a Model A, and Model B does not require all this thing. So this is how the Model A and Model B. Now I would like to take you to the last slide and then start with certain point. Now these are the point only they are discussing revenue risk, other point which is not of much importance. So I'm not running those presentation. I'm just taking you to the last slide, which is important. On that, government is looking for feedback and suggestion from all the trade members. This is the conclusion slide. Conclusion slide says fusion of both models. What GST Council is looking, fusion of both model, Model A and Model B. Simplicity of operation and design. Even I do not know what is the utility as on date. So I cannot comment upon simplicity in terms of design. Operation best known when we will start. Coming to continuous facility to add invoice by the seller and continuous viewing of invoices by recipient who can lock the invoice after which seller can't edit and delete it. Look at the first point. The same point which was there on a conclusion slide. Continuous facility to add invoice by seller and continuous viewing of the invoices by recipient who can lock invoice after which seller can't edit and delete. What would be your comment? So PhD, at least before coming for this presentation before you, I thought of taking this initiative and create some suggestion. Definitely the simplest model, since it empowers the buyer to complete the transaction in all aspects as early as possible and not wait for the return cycle. It is important to recognize here that this is removing concept of GSTR1 and the confusing section contained therein. We have seen in GSTR1 lot many particulars, right? Confusing one. It is simply asking for invoice details to be uploaded. So I have highlighted invoice details to be uploaded. If using a system or entered if using the portal. And the buyer can accept and lock the invoice, but there are certain apprehension also, and this is what we are contemplating. But there are certain apprehension also if no edit option given to the recipient. What could be the problem? What happens if there is a mistake in invoice and locked by acceptance? First point, which is possible, 10,000 into 10 rupees or 10 lakh rupees. Maybe wrong GST number of recipient. Lot many things can be thought of. Small vendors does not have facility for continuous upload of invoices or continuous acceptance of invoices for small taxpayer. What is the mechanism? For large vendors, generally there are so many workflows that it is difficult to ascertain vendor invoices on a continuous basis. And what is the motivation for a seller to upload all continuous invoices? So we have to also see simplification in realistic terms. Of course, for the large taxpayer, no problem. Just think of SME and MSME. Okay, I'm just going one after another. So coming to the next point of that particular slide, return design. System will draft monthly return based on supply data uploaded, inward supply accepted. Annexure will contain these details along with data on B2C, credit note, debit note, reverse charge purchases, etc. fed by taxpayer. Now let me do 2-3 suggestions all together. My suggestion to the government and this committee would be outward supply particulars to be uploaded. That's what they are referring to. We have seen challenges in filing number of particulars in GSTR1, including HSN-wise and quantity-wise summary. Do you all agree? Do you all agree? Do you want to continue line-wise, rate-wise, HSN-wise, quantity-wise, again being replicated in a new simplified GST form? I don't think. Are you getting me or not? Yes. You're getting me, right? So what is suggestion I'm giving to the government of India? Needs simplification in particulars to be filled up in GST return. For the time being, it is suggested that SSE or suppliers should be asked to upload outward supply data only at invoice level and not on line and rate level basis. In our view, only following 6 fields should be captured by GSTN system. What are those 6 fields? GSTN number of recipient, invoice number, invoice date, taxable amount, tax charge, either intra or inter, and the last item would be the total value, total tax and total invoice amount. I'm saying only these 6 particulars, and then again I'm further saying that kindly synchronize these details for GST return and eBay bill also. Now, you know HSN-wise summary. When you go to GST return, HSN-wise need to be captured only when aggregate turnover is more than 1.5 crore. But for eBay bill, even though you are less, but consignment value is more than 50,000 rupees, HSN-wise need to be captured. So I said, why you wanted me to capture some data for GST return and some data for eBay bill, which is not being synchronized. Kindly align those particulars so that we get more simplification, which is the objective. So what I'm suggesting in a third point, synchronization of details to be uploaded for filing GST return with eBay bills to be generated. It is suggested that only above these fields should be sufficient for Part A of eBay Bill 01. I do not require to capture those HSN-wise, capture these 6 fields, and that will also help me to auto-populate my GST return. And it get aligned together. I need not have different system on GSTN and different system on nic.in. So this is what I'm referring to. And then further, I'm also suggesting that other details like HSN, quantity, line-wise, entries, etc. should be for second phase of GST implementation. Let be smooth. Let me understand all this process. Because even tax department, even system is not working. Let's align together somewhere. Coming to the return design, they are saying system will draft monthly return based on supply data, upload it, and inward supply accepted. So there would be annexure for outward supply and annexure for the reverse charge paid by taxpayer, our suggestion. Even for credit note, debit note should also be part of continuous facility of uploading. Why you want me to upload only at the month end? You're saying only invoice. Why not credit note, debit note? On continuous basis? First part, and credit note or debit note is just simply another tax document. The way that an invoice is a tax document should receive the same treatment and processes. Additionally, and this is very interesting I'm raising here, these documents need not have linkage to an existing document. You must have experienced that credit note, you have invoice reference number, and that too if I have 100 invoice number, I can't. Problem. I'm saying that done away all this thing. It's simply a tax document for me, credit note generated. So what I'm saying, but can be completely independent document as long as the tax incidence is captured and the liability confirmed to the government. It is identical to the invoice. And the only protection the government would be looking for credit note when supplier liability gets reduces. Government can create some mechanism whereby recipient reverse that corresponding ITC. But it should not be linked with the invoices, which we are experiencing today. Okay, now coming to the input tax credit. You know Model A and Model B. Model A talks about provisional credit. Model B does not talk about provisional credit. So what is our suggestion? There should be concept of provisional credit. We are for it to be allowed in the hands of recipient as suggested in a Model A. Further, we would also like that a provisional credit given to the recipient if supplier do not upload the outward supply, but said invoice is added by the recipient. This will help the government in twofold manner. How twofold manner? The first would be recipient will get the provisional credit, and second, government will be able to know such defaulting suppliers in case of intentional or unintentional error of not uploading the outward supply details, right? And then further continuing with, input tax credit will be given on the basis of acceptance of invoice is a welcome move, no denial. But credit linkage to payment of tax by supplier, we have our observation and reservation, will spoil all the benefit expected from simplification. Since nothing about the business is simplified, if the supplier liability is fixed, you're fixing the supplier liability and denying the credit for non-payment. If I paid the amount to the supplier and supplier is not depositing and you know who is the supplier, why you're not catch holding the supplier? Allow me the credit and create exemplary. There's a GST credit rating also, right? If you are habitual offenders in GST, government is going to give you some rating. And they have also got mechanism that in case it is not being reconciled, credit to be reversed, department will come to know who is the defaulting suppliers. You catch hold of suppliers, but don't deny my credit. We are not for it, right? Going further, it is already stated below that there will be enough safeguard. This PPT is saying, I'm not saying, this PPT itself is saying that they will have enough safeguard built to prevent fraudulent registration. Fraudulent registration of supplier who is not making payment of tax, taking pre-deposit. You take pre-deposit from them in case you find them they are habitual offender. Limiting the credit flow from defaulting suppliers through restriction to upload invoices and making registration inactive. All these safeguards are mentioned in the presentations. After all these safeguards, our input tax credit will get denied if tax is not paid by suppliers, should not be appreciated. If you make payment to the supplier and supplier does not deposit, your credit would be denied. Are you agreeing for it? You're not agreeing for it. So that's what we are making suggestion, right? Now coming to the semi-automatic process, and before I go to semi-automatic, let me complete first their point. So they got two more points and then they have left it open. So these parameters they have created. We have not created these parameters for feedback. Government itself has created these parameters and wanted to have our suggestion. So fourth parameter is semi-automatic process of ITC reversal through administrative order. They are saying after the reconciliation period, they will come to know and they will pass some administrative order. So what it says, kindly run through. System will track and generate a list of supplier defaults. Cases from this list may be presented to the assessing officers based on configurable rules. All are based on quantum of difference. System issues notice to the selected cases. If the rectification is not satisfactory, please bear in mind, say if the rectification is not satisfactory. So what is satisfactory? I don't know at this point of time. Officer may issue reversal order at the click of button, semi-automatic. And I've highlighted this satisfactory word, right? So I'm also giving suggestion. The key problem here is the use of the term satisfactory. With the previous provision of credit linkage to payment of tax, every officer will simply state satisfactory rectification is to get the supplier to pay the taxes. How can I make supplier to pay taxes if he is a habitual offender? I have paid the amount to him. Maybe I thought of some other way around, which I am also putting forth. Instead, government should introduce a garnishee clause and state that if invoice remains unpaid by the buyer, I have not paid, then I am not supposed to take credit. But I know my supplier is a habitual offender. Why can't government can ask the buyer to remit the unpaid amount on behalf of the supplier and take credit? Some alternative suggestion. If I know my supplier is a defaulting supplier, my credit is at stake for the past invoices, but I've got number of other invoices for which I have not made the payment. Can I stop payment to him and pay the taxes directly to the government authority and take credit? Maybe out of 10 invoices, my 2 invoices credit at stake. But 8 invoices I have not paid, but I know he's a defaulting supplier. If I pay to him, again my credit would be denied. Instead, create some provision if some supplier which is being designated defaulting supplier, I will not pay to him, rather I will pay to the government and take. However, an open-ended clause of satisfactory along with a clause of credit linkage has potential to derail the entire simplification. Yes, satisfactory should include proving not just the invoice as genuine, but the entire supply of goods and services, and from a legitimate supplier, and could also include proof of payment, but the clause of credit linkage should not be used in these circumstances. Safeguard. Safeguard, they are saying, starting right from preventing fraudulent registration to limiting credit flow from defaulting supplier after a certain threshold to making a registration certificate inactive for non-filing of return by defaulting seller. That looks okay. Quite okay. If he's a defaulting, make it inactive, RC, let I know that he's a defaulting supplier, I should stop purchase from him. But out of 10 invoices, 8 invoice suggestion which I said should be taken into consideration. Then I said, disclosure of transaction under reverse charge. Now they are only talking on 2 points, provisional credit and linkage to the tax payment, and keeping mum on all other aspects. I say, and we wanted to have, that a certain other thing also which we have seen the problem in existing GSTR1. You must be knowing that reverse charge 9.4, purchase from unregistered supplier. You have to create invoice, that too HSN wise and SSC wise, pay the taxes. How to capture those transactions? Operationally very inconvenient. To the extent I know, industry has experienced that 9.4 capturing is very difficult. HSN wise and rate wise. Very, very difficult. Can we have alternative mechanism that whatever I purchase from unregistered supplier may be a nominal rate 1% or 0.5% fixed. I will pay GST, but I will not avail ITC. So that will simplify the process. You must be knowing fringe benefit tax in IT. Sometimes we are convenient not to take ITC at the cost of operational convenience. And then I need not require to capture all those transactions. Only my PL account amount will come and get reconciled with the GST paid with no ITC. This is what suggestion I put forth. Maybe you can sound. We will discuss after my presentation. Then ISD credit. We know GSTR 6 ISD credit. How many of you successfully has filed GSTR 6? And that too, there is always mismatch, date mismatch. Unless the supplier files GSTR 1, how the 6A would be generated and how he will get the credit. And once credit is not available, how he will distribute, and provision says in the same month. What happens if I miss some credit to distribute this month? Can't I distribute in subsequent month? Those are all open for ISD credit. But this return is not saying anything on ISD credit. So how they're going to capture such ISD credit? We are talking about simplification only on 2-parameter provisional credit and linkage to the tax payment, saying nothing on other component which is equally important. I do not know what simplification we are referring to at this point of time. Export. You know all table 6, GSTR 3B, 31A and 31B. If you put number in 31A instead of 31B, gone. Gone, your refund gone. They have given table 6, table 9, so many amendment, correction. What is there in simplification return? What do the particulars need to be? I may be under LUT or bond or maybe on payment of IGST, but I do not know how those transactions are going to be captured in this simplified GST return. They are only saying outward supplies, annexes, and inward supplies. How the export? I do not want to file my separate refund RFD 01A. I want to see my return would be considered as my refund application. Get it automated. We have experienced the problem of past, now we can definitely correct it in a way required to be. If you want reconciliation would be shipping bill bites, kindly include it appropriately. Don't provide me table 9. If I make some mistake, and it may happen, to error is human, I may be given some, but I do not know what this return is referred to, which we are referring to. I have not seen the utility as yet. So I can't comment upon whether that will have or incorporate all the particulars in simplified form which trade is looking at. So when I have not seen the utility, what I'm looking for? I'm looking for new GST return utility should be put on public domain for proper understanding and training purpose. And it should also be open for making necessary corrections if required on the basis of initial usage by taxpayer for interim training time period. Then only I can say this utility is working for me. You should not introduce utility without taking my cognizance. Let me also try out my hands whether working or not working. But I don't know what kind of return form they are going to come up. They should not only consider 2 parameters. That's the point I'm making here. This is all from my side, but nothing is conclusive as yet.